Assalamu Alaikum everyone, welcome back to another video. I wasn't planning to do a video today. The plan was to do the usual Friday morning videos, but having looked at what's happening in the market yesterday, what is happening today pre-market is just too much. And I know a lot of you have joined the channel recently. You might be new to investing, you might be new to basically investing in the stock market generally. So I just want to give you some perspective of where I am, what you could potentially do like in this type of situations. So first we're going to talk about what's happening now, and then we will talk about what the plan is just kind of going forward. Okay, because right now when you look at the stock market, so if you look at just yesterday, at the beginning of yesterday, it was almost, I think the Dow Jones, I think was almost up 400 points or something. And then at the end of the day, it was down almost to 500. Now, looking at this just looks ugly. Look at Tesla, 7% down. 7% down. Tesla is now $764 stock from almost $1,200. Okay, so this looks ugly. Especially if you invest in the high tech companies like I am, some of the CRM, for example, is now down. I think they're currently trading $190 per share from almost to 300, I think, at one point. Look at Nvidia, look at Broadcom, and so on. So the point I'm trying to make here is just this doesn't look great. Okay. And right now, it's just going to get worse from now on. So let me explain what's happening. So just this week, okay, everything is down. And then a year-to-date performance, it doesn't look that bad. But then again, when you look at Microsoft, for example, a year-to-date is down about 16%, 10% here, 11% here. And this is why when I was just doing research to find out what's going on in the world right now, because of what's happening in Ukraine right now, because of the geopolitical side of things, as well as the interest rates, we are now in correction territory. What that means is a correction is when the stock goes down, the market goes down 10% from its highest point. We've now, I think, down about 11% from the highest point. So if you look at the year to date, the S&P 500 is down almost 12%. Okay. Now, there's two things happening here, and this is really important to understand. First thing is the Russia situation, okay? And when you look at the European indexes today, a lot of them are down. So Russia's, for example, the stock market is down 33%, rightly so because of what situation they're in. Now, I was very surprised to find out Germany, the German stock market is down almost to 5% today. And the reason for that apparently is because a lot of the companies in this index, okay, or in this stock market, has actually links with Russian owners in Russia and so on. So for that reason, it's actually down quite a bit. The FTSE 100 is actually only down about 3%, and I say only down 3% today. So everywhere you look, regardless whether it's Euro, America, everything basically looks ugly today. Okay. Then the other thing that's happening is the interest rate. So the interest rate as we speak in the US is actually currently 0. The Fed will raise that in March, I think 17th of March this year. Okay, so not long to go. It's about a couple of weeks away. That, it adds uncertainty. The stock market doesn't like uncertainty. This situation has happened with Ukraine. At top of that, you've got the uncertainty of basically the interest rate. Between those two things is enough to bring down the stock market. And today, you can see the S&P 500 will be down almost to 2.35%, okay, just today. And that's the pre-market. So the markets are still closed. Once they open today, okay, that's basically what's going to happen. Now, so all of this is all of these things that's happening right now, can't even talk. What do you need to do and what should you do moving forward? Because obviously, the Russia situation is just came out of nowhere. It's going to be around maybe a couple of days, maybe a week or so, and then it's going to disappear. And then obviously the Fed situation will start. And that's the one I'm more concerned about right now, if you ask me, okay? And when I say concerned, I'm not really concerned. I'm still buying, and I will talk about that later. But I'm just saying that is more worrying for me than actually Russia's situation, because this is something that came out of the blue. It will basically, because of the uncertainty and all of a sudden this start happening, I think the stock market doesn't like that, obviously, for obvious reasons. And the next couple of weeks, once we get to used to it, or hopefully stops, right? Because we don't want this to escalate, then hopefully then it will go back to normal. But the interest rate is something that's going to stick and something that's going to be around. And then they obviously going to hike it in a couple of more times this year. Even some people, I think it was JB Morgan, that said the Fed will actually hike the interest rates about 9 times or 7 times this year. And that's quite a little bit worrying. But if you are a value investor, so now we're going to switch from what's been happening in the news or why the stocks are down to what you should be doing. Okay, if you are a value investor and you're buying companies on the discount, because your investment horizon is say 5 to 10, 15 years from now, then you have absolutely nothing to worry about. In fact, this is a good news. This is a great opportunity, because remember, last year, if you look at just the last year, everything was up. Every stock was up last year, 10%, 20%. Some days Tesla was on itself was up about 12%, 10%, right? So everything was up. We needed a correction to bring things back. And this is what I'm talking about. Now, there were a lot of companies in my portfolio just last year that were about 2 stars, 3 stars maximum, okay? Some were very valued, some were way overvalued. Now, almost every single company, including Tesla, okay, is now becoming fairly valued. Okay, West Management was one of those companies who was so overvalued before. Broadcom was one of those. PPG was another one. Lowe's was one of them. Home Depot, up until yesterday, I think it was in that territory. Okay, Microsoft and a couple of others were here and there fairly valued, whatever. But I've never, ever seen Adobe or Salesforce or other companies that were actually way over basically sold. And now they are. And this is a good opportunity. So if you are a value investor, meaning you look for stocks that have a great potential, obviously have a good cash flow, they have got great business model, they have a moat, they have all the things that we're talking about, you know, profit margins and so on, and you can see yourself investing in these businesses in the next 10 years, 20 years, then it's a great opportunity to buy them on, you know, on discount, right? When Nike, for example, or Nike starts selling products for trainers that you love for half price, what do? Do you just walk past it because you're worried about what's going to happen? No, you buy it because that's tempting, right? And this is what I'm doing, okay? And this is what you should be doing right now. Thinking, look at your portfolio, identify the stocks that you love, and think companies like Microsoft, maybe companies like 3M were absolutely discounted. I don't know what you own right now, but look at the companies that you feel like should be in your portfolio, maybe for the next 5 to 10 years, if minimum. Then start strategically, start planning to like buy a little bit here and there. Okay, so dollar cost average every single week into the markets without fail, and that's what I've been doing from day one. So yesterday, because of what was happening, I bought more of companies, for example, this because I realized I was under in terms of weight. I think I had less than 5%, and I want this stock to be at least 5 to 6%, so I bought more yesterday. Okay, and for that reason, when I bought more, I actually brought down my average price. Now I'm looking at companies like Air Products and Chemicals. I'm looking at 3M. I'm looking at companies that pay dividend right now. I'll be honest with you. Okay, I'm kind of ignoring the Adobes and the Salesforce at the moment. And for the reason I'm doing that is because I've realized if we get into a bear market, and that's when obviously things do not, like, you know, when the economy is not doing well, the stock markets will be in a bear market. And when that happens, okay, the companies that tend to do well are the companies like the Johnson & Johnsons that pay actually good dividend. They have a business model that everyone needs. They do well in those kind of markets. Okay, price appreciation goes kind of out the window. So the dividends is basically how you get paid. and taking that dividend, reinvesting it, you actually grow your business. Basically, you grow your portfolio generally, and that in the long run will help you. By the time hopefully the market is correct, and then they go back to a bull markets. Okay, if you own 10 shares of Johnson & Johnson that you paid for, say, 120 instead of 160, and it hits 160, that price appreciation as well as the dividends will help you. Okay, so there's a lot of things you now need to look at your portfolio and manage it. Become the actual portfolio manager. See where's my risk. Okay, identify the risk straight away and see what you can do about it. My risk is basic companies like Tesla. Having said that, the 2 stocks that I own in here are actually almost free, because I've actually I've taken enough profit, okay, in the last couple of years to actually not worry about it. The other companies are companies like Salesforce, but I'm not worried about Salesforce because it's a great business. Okay, couple of others, Adobe is another one. I'm not worried about KLA. I'm not worried about MasterCard. I'm not worried about Visa and this type of companies, because I know people will still need Visa. People will still need, for example, things transported from A to B in the US, for example, for the Union Pacifics. Then you've got Qualcomm. Okay, Apple will still be making iPhones, so their chips actually needed. 5G is still going to be around. Procter & Gamble, health products for things like the Head and Shoulders, is not going to disappear, is it? Okay, people will still need to paint their houses and so on. Pfizer, the vaccine will still be needed. Microsoft. So you need to start looking at your portfolio and say, what if we get into a bear markets, right? What do I need to do? And this is why it's really important to diversify your portfolio. The only regret I genuinely have right now is not investing in oil stocks. I've talked about it before. I never liked it. I don't know much about it either. But if I had invested more in the oil stocks, right, I think it would have meant a lot, because it would have balanced overall. Because if you look at the oil stocks, so yesterday, a year to date, basically, company like Exxon is up 25%. Look at CVX or Chevron, it's up to 15%. So they've been doing really well, while these other companies are doing not so great. So owning them up maybe about 2-3% in your portfolio actually gives you that diversification that you need. So generally right now as we speak, yes, today it doesn't look great. The stocks are down. It's been down in the last few weeks, and now some of you are worried about generally what's going to happen. But I'll be honest with you, don't panic. Don't panic sell. That's when you lose money. Right now I'm down. So companies like 3M, I'm down £400. Am I selling it? Absolutely no. How long am I going to hold on to this business? Hopefully next to 10 years, 15 years. Okay. And the same thing goes for Adobe. I'm not selling it. I'm not selling Air Product and Chemicals. I'm not selling Cummins. I bought more of this company yesterday. I'm buying more today of some other companies that I've mentioned. KLA, I didn't even know it was down yesterday, basically this much. I genuinely thought I was in the positive. I looked at it this morning, I'm like, oh, I'm actually down a little bit. Okay, the 2 companies I'm really watching right now, I'm hoping that they will go to fair value, is Home Depot and Lowe's, because I own such a small portion of this business, right? I want to add more. I want to have at least 10 to 15 shares of each one of these businesses. So I'm waiting for them to hopefully go down to my fair value at the moment. So yeah, so I am looking for opportunities. I have got a little bit of money on the side that I've been basically kind of holding on to actually invest in the market. So we'll see how it goes. And the ETFs, by the way, they're not doing great either. The one that we bought the other day, 2% in comparison to what's happening in the stock market generally. That's all right. That's actually not bad at all. So yeah, that's my take on what's going on at the moment. Please don't panic. Look at your portfolio, see what you can do. If you don't have any money on the side at the moment, maybe just leave it, just let it grow, just see what happens. Okay, in the next, just observe from far. Have your the watch list ready. Okay, I have mine ready here, and as you can see, almost every single company is down. Okay, and for that reason I'm like, where should I put the money? So I'm actually strategically selecting companies that I'm undervalued at the moment or underweight at the moment. So companies like Cummins, for example, and so on. So yeah, have your check or watch list ready, do your analysis first, and then once you get the money, hopefully you can start putting that money to work. Okay, so no panicky, Just look at what's going on, observe from far. If you, or just honestly, sometimes it might help to even not delete the app, but just don't even open the app and just forget about it. Okay, if you don't have the money for now, just don't worry about it. Don't watch the news, don't listen to CNBC and all the rubbish that they're talking about. Okay, they just make you panic for no reason, because remember, the business models have not changed. MasterCard will always be MasterCard. Nothing happened to the business. Okay, you still have MasterCard in your pocket, and you're probably going to the shop to buy products with it, and they probably get their cut. Okay, nothing happened to the business. It's just the speculation that's going on at the moment. There's so many uncertainties. The stock market does not like uncertainties. We could potentially get to bear markets where we're not making a lot of money, so that's when the dividends stocks come in. Okay, and if we get to a bear market, just load up on the businesses that you really like and genuinely enjoy, and that's about it. So that's my take on what's happening today. Please don't panic. I'm not selling anything. The only stock that I sold out of is the one I told you the other day, and that's TSM. And the reason I sold out is because I wanted to keep everything in my ISA account. Okay, and right now the way things are going, I just don't know what's going to happen, so I'm going to keep everything in this ISA account for now, and that's why I took the money out of TSM and I put it into these 3 ETFs. I'm going to monitor them for at least for the next couple of years and see how it goes. I hope you enjoyed that video. If you like it, just subscribe to the channel if you haven't already. If you have any questions, as always, let me know. I hope you're doing well, and again, please don't panic, and don't panic sell whatever you do. All right, take care. Assalamu Alaikum.